Welcome back, dear learners, from the ad break. Before the short break, we were able to prepare a debtors allowances journal, and we were also able to post it to the general ledger. But you have to understand that every debtor in our books is very important. So we have a specific place where we record each individual debtor. You remember what we call that? We call that the debtors ledger. So if you look in our debtors allowances journal, we have two debtors here. We have M. Moyo and S. Susan. That means we must have a debtors ledger specifically for M. Moyo. Let's see if we have it. There it is. So M. Moyo is already owing us 4,000 from the previous purchases that they have done. And then now, you will find that we have also sold some goods here. All right. So when goods are sold, the source document is an invoice, and our invoice comes to the debit side. So once you see an invoice and you are in the debtors ledger, it must come to the debit side. So we sold goods to M. Moyo of 17,000. So if you say 4,000 plus your 17, that is how you get your 21. Then some of the goods were damaged. Therefore, M. Moyo had to return the goods to us. You remember, there it is. And then there is 1,000. So when you are now recording your allowances, you come to the credit side, which is a minus. So you come to the credit side, which is a minus. I'm going to put my 1,000, which is that one over there. That means from the 21,000 that M. Moyo is owing us, they no longer owe us 21,000. Because they have returned goods worth 1,000 back to the business. Therefore, they are now owing 20,000. Let's look at the other debtor as Susan. With as Susan, they were owing us 8,000 at the beginning. We also sold goods. You see it by that invoice over there. And remember, on the debit side, it's a plus. Therefore, they were owing us now 28,000. But goods were returned, and these goods were for 1,200, as you can see over here, 1,200. That means you now say your 28 minus, remember, on the credit side, it's a minus 1,200, and then at the end, they owe us 26,800. After you have completed your debtors ledger, it is very important that you now move on to what we call the debtors list. The debtors list is simply a list with all our debtors. As it says, a debtors list, a list with our debtors. Who are our debtors? M. Moyo and S. Susan. So we need to take the amounts that they are owing us to the debtors list. There is our debtors list. How much is M. Moyo owing? There it is, the 20,000. Same 20,000 that you see here is what they are owing over here. And with S. Susan, remember, it's 26,800. You will see the same amount over there, 26.8. When you add these two now, you have your 46,800. Now, dear learners, it is very important for you to remember the trial balance. Remember the trial balance. We have our debit as well as our credit. Now, we have to be able to post amounts from the general ledger to the trial balance. And what you see here on your screen, we have your debtors control. And we have an amount of 51,800 that we wish to post to the trial balance. Here, remember the dead click. What does the dead click stand for? We debit all our expenses, that is the E, we debit all our expenses. We also debit all our assets, and we also debit our drawings, that is the last D for drawings. But we will credit our liabilities. We'll credit our liabilities. We'll also credit our income. But lastly, we'll also credit our capital. All right. So we are now going to quickly look. There is our trial balance. Remember, Here it will be the debit and here is the credit. So I'm going to take now my amount, which is 51,800. Remember, what is debtors control? Debtors control is an asset. That means it comes in the balance sheet account section. I'm going to come here and I'm going to say debtors control. And then what side is my balance here? My balance is on the debit side. If my balance is on the debit side, I'm going to bring the amount to the debit side, 51,800. Let's quickly go now to the next one, trading stock. Remember, trading stock is also an asset. That means it increases on the debit but decreases on the credit. I have a balance here. How much is that balance? 42,900. I'm going to come here and I'm going to say trading stock. And I'm now going to say 42,900. Let's quickly move on to the next one, debtors allowances. How would I show my debtors allowances? All right, remember the debt click. Okay, so when I come here, they are now going in the nominal accounts section. I'm going to come here and I'm going to now say debtors allowances. All right, so you can see my debtors allowances are on the debit side. So I'm going to come here and I'm going to say 2,200. And then with my cost of sales, I simply have to close the account. So you're simply looking for the side with the highest amount, which is 18.5 here, 18.5 here. And then the difference here is going to become 17,400. All right. So that becomes my total brought down. So when I'm here, I now have my total that is being brought down, which is 17,400. So when I come to my cost of sales, remember, cost of sales recorded on your debit side, I'm going to have now my 17,400. Okay. Now, we are going to quickly move on to your accounting equation. Now, it is very important that when I do the accounting equation, you pay very good attention. Let's look at the accounting equation. It says, all goods are sold at 100% markup. Received goods returned by MOL together with the debit note, 1,000. So the moment goods are returned, remember, it affects how many accounts? 4 accounts. 4 accounts. Let's start with the first one. We debit our debtors allowances. Once you debit your debtors allowances, remember, debtors allowances are decreasing the goods that you would have sold. And once your sales is reduced, that means your income is reduced, it affects your owner's equity. So that's why you see we have a minus 1,000. All right? And then when you have your debtors allowances, the account that is going to be credited is debtors control. Remember, debtors control is an asset, and once your asset is decreasing, that's why you find on your assets it's minus 1,000. Does it affect our liabilities? No. So your liabilities will be 0. Remember now, we have 2 more accounts to go. The first one is going to be trading stock, because goods are being returned. So I'm going to debit my trading stock. And once I debit my trading stock, remember trading stock is an asset. Once you debit an asset, I'm coming here to say plus 500. And then the next account is going to be cost of sales. And I'm crediting cost of sales. In other words, I am decreasing my cost of sales, knowing cost of sales is an expense. So the moment you decrease your cost of sales, you come here, hence you see it's a plus 500 because you're decreasing cost of sales, which is an expense. Does it affect my liabilities? No, you remain with 0. The last part now says, issued a credit note to A. Susan, 1,000 for an overcharge. So A. Susan did not bring back goods to us. So do we have 4 accounts in this case? No, there will not be trading stock, there will not be cost of sales because we only overcharged as Susan. Therefore, it means we're going to debit our debtors allowances. Remember, once you debit your debtors allowances, your owner's equity becomes a minus. And then the second account is going to be crediting your debtors control. Remember, your asset is decreasing, all right, and therefore minus on the asset. Dear learners, thank you so much for joining me in today's class, and I hope to see you again very soon. Please take good care. Goodbye.